Welcome back to Explain the Charts, your ultimate destination for deep dives into market trends and technical analysis, providing you with actionable insights. Today, July 23rd, 2025, we're dissecting the formidable movements of BTCUSD, combining the latest breaking news headlines with comprehensive chart insights to give you a complete picture of Bitcoin's current standing and its potential future trajectory. Recent headlines are ablaze with audacious Bitcoin price predictions across major financial news outlets, particularly Cointelegraph's bold projection of a $140,000 target, indicating a prevailing strong bullish undercurrent in the broader cryptocurrency market. However, conflicting reports from sources like Yahoo Finance and Seeking Alpha also highlight Bitcoin's persistent struggle and increasing selling pressure as it attempts to conquer the significant $120,000 psychological and technical barrier, suggesting some market fatigue. Furthermore, significant developments like the SEC's recent approval, swiftly followed by an immediate pause on Bitwise's bid to convert a crypto index fund to an ETF, underscore the ever-present regulatory uncertainty impacting overall market sentiment and investor confidence. As we bring up the daily BTCUSD chart, we immediately grasp the compelling long-term uptrend that has propelled Bitcoin from the low $60,000 range in March of 2024 to its current impressive valuation near $120,000. This sustained and powerful ascent over the past 16 months signifies robust accumulation by major institutional players, growing mainstream interest from corporations, and a reinforcing belief in Bitcoin's enduring long-term value proposition as a digital asset. The current quoted price of around $119,000, as prominently mentioned in various news reports from July 22, 2025, perfectly aligns with the critical resistance area we are observing on our charts, making this a pivotal moment. The ongoing market liquidity wars discussed by Cointelegraph further suggest a significant battle between buyers and sellers, which is directly visible in the price action around resistance levels. Investors should carefully consider how these macro-level news items influence the micro-movements on the charts, as regulatory clarity or major corporate adoption announcements can rapidly shift sentiment. Let's zoom into the daily chart and pinpoint the critical price levels that have defined Bitcoin's trajectory throughout this extended bull run, offering crucial insights for future movements. The immediate challenge lies at the $119,000 to $120,000 zone, which has consistently acted as a formidable short-term resistance, often leading to temporary pullbacks, profit-taking, or increased supply overhead from previous highs. Looking back to early 2024, a bedrock of strong support was firmly established around the $50,000 to $55,000 area in May, marking a pivotal turning point in its bullish narrative after a significant price correction. Following this, Bitcoin established progressively higher lows, with the $90,000 to $95,000 range converting into a solid and reliable support level in late 2024, illustrating the classic technical principle of previous resistance transforming into new support zones. More recently, the $100,000 to $105,000 level emerged as an even more robust and frequently tested demand zone, successfully cushioning several pullbacks and reinforcing the overall upward bias of the market structure. The current price action hovering around $120,000 is a direct test of market conviction. A decisive daily close above this level, especially if accompanied by significantly increased buying volume and strong bullish momentum, would be a clear bullish signal for further upside. Conversely, repeated rejections from this resistance, clearly indicated by large upper wicks on candles or significant red breakdown candles, could signal a temporary exhaustion among buyers, potentially leading to a much-needed healthy correction and consolidation. For long-term investors, maintaining positions above these key support levels, particularly the psychological $100,000 mark, remains a compelling bullish indicator, suggesting that any dips towards these levels are likely prime buying opportunities. Traders should look for confirmation signals such as bullish candlestick patterns or crossovers with moving averages to validate entry or exit points around these critical price regions. The sustained volume on daily up moves compared to down moves further reinforces the long-term positive trend, indicating continued accumulation. Let's take a closer look at a particularly telling period on the daily chart: the sharp dip and impressive recovery witnessed in early August of 2024, a textbook example of a strong bullish reversal pattern. Focusing specifically on the candles from August 4th through August 9th, you can clearly see the dramatic red candle on August 5th, which saw the price plummet from nearly $58,000 down to a low of $49,050 in a single day. This sharp decline was accompanied by an extraordinary surge in trading volume, peaking at over 76,000 Bitcoin, which often signifies a significant flush-out of weak hands and forced liquidations, typically a sign of market exhaustion in a downtrend. However, instead of collapsing further, Bitcoin immediately demonstrated incredible resilience, forming a classic V-shaped recovery in the very next few days, remarkably clawing back a substantial portion of its losses and indicating a strong underlying demand zone. This swift and powerful rebound from the $49,000 low illustrates robust underlying demand and aggressive buying by both long-term holders and institutional investors who viewed the dip as a prime accumulation opportunity, showcasing confidence in Bitcoin's future. Such high-volume reversals from key support levels are exceptionally powerful indicators in technical analysis, suggesting that the broader market trend remains fundamentally intact despite temporary panic-driven selling, and often set the stage for subsequent strong rallies. It emphatically confirmed that even major corrections in Bitcoin's price can be short-lived, with strong historical support levels attracting fresh capital and maintaining the overall bullish market structure. This event served as a crucial reinforcement of the upward trend, providing significant confidence for investors looking for strong entry points after experiencing material, yet temporary, pullbacks. Always analyze the volume accompanying such sharp moves, as high volume on a strong reversal provides more credibility to the price action. The rapid recovery from this low demonstrated Bitcoin's ability to absorb substantial selling pressure, a key characteristic of strong assets in an uptrend. Now, let's transition to the 1-hour chart to analyze Bitcoin's intraday price behavior and volatility, though it's important to explicitly state that the historical data available for this specific time frame concludes on July 5th, 2025, and therefore does not reflect today's immediate price action. This 1-hour time frame is invaluable for active short-term traders to identify immediate trends, assess momentum shifts, and pinpoint significant price movements within a single trading day, offering a more granular view than the daily chart. In the displayed historical hourly data, observe the distinct periods of consolidation, where price action is relatively tight and trading volume might be lower, often followed by explosive breakouts or breakdowns with significantly increased trading activity, signaling shifts in power. For instance, after a notable rally to nearly $110,000 early in July, Bitcoin entered a phase of slight retracement and sideways movement, oscillating tightly between $107,000 and $108,000, as bulls and bears battled for control in a narrower range. Pay close attention to volume during these shorter time frames. A notable surge in volume on an upward move out of consolidation, or a sharp drop in volume during a retracement, can powerfully confirm the strength or weakness of a short-term trend. Support and resistance levels on the hourly chart are frequently retested, providing numerous tactical entry and exit points for day traders and swing traders who aim to capitalize on these shorter-term fluctuations. Identifying common bullish or bearish candlestick patterns like engulfing bars, hammers, shooting stars, or dojis on the hourly chart can offer early signals for potential short-term reversals or continuations before they are fully apparent on daily charts. This analysis helps in understanding the constant ebb and flow of market sentiment on a finer scale and how smaller timeframes react to immediate supply and demand shifts and news events. A clear break above a resistance level on high volume on the hourly chart would indicate strong short-term bullish momentum, while a break below support on high volume would signal short-term weakness. Observing the relationship between current price and moving averages on the hourly chart can also provide additional dynamic support or resistance levels for intraday trading. Finally, we move to the even more granular 15-minute chart, the most immediate price action view we have in this particular dataset, with data concluding on July 19, 2025, making it ideal for demonstrating hyper-short-term market dynamics and high-frequency trading principles. On this compressed time frame, every individual candle tells a highly detailed story of immediate supply and demand pressures, revealing minute shifts in market sentiment and underlying order flow dynamics that are often completely invisible on longer charts. You can witness extremely rapid fluctuations and swift price swings, which are typical reactions to very minor news events, the execution of large block trades, or even the immediate algorithmic responses of automated trading systems. Observe how short bursts of extreme volatility can frequently lead to extended upper or lower wicks on candles, signaling strong rejection of specific price levels and potential immediate reversals or exhaustion of a short-term price move. Trading on the 15-minute chart demands extreme precision, quick decision-making under pressure, and robust risk management strategies, as support and resistance zones are much narrower and can be breached with minimal price movement. This time frame is predominantly utilized by scalpers and high-frequency traders who aim to capitalize on very small price differences throughout the day, often entering and exiting positions within minutes or even seconds. However, for making broader, more reliable trading decisions and to avoid getting caught in the inherent short-term noise, it is absolutely crucial to always cross-reference patterns and signals observed on the 15-minute chart with the prevailing trends and key levels established on the 1-hour and daily charts. Understanding the intricate interplay and hierarchical relationship between these different timeframes is paramount for developing a cohesive and effective trading strategy that balances short-term opportunities with long-term market direction. A strong, sustained breakout on the 15-minute chart with increasing volume can indicate the start of a larger move, but requires quick confirmation from higher timeframes. Conversely, a failure to follow through on a breakout, particularly with decreasing volume, is a strong signal for a potential false breakout or trap, which traders should watch out for. In summary, Bitcoin has showcased remarkable long-term strength throughout late 2024 and mid-2025, staging impressive recoveries from major dips and steadily climbing towards the pivotal $120,000 resistance area. Overcoming this $120,000 psychological and technical barrier, particularly with strong sustained buying volume and a decisive daily close above it, would strongly confirm the path for a rapid ascent towards the ambitious $140,000 price target currently being discussed in the crypto community and by prominent analysts. Conversely, should Bitcoin fail to establish a firm foothold above $120,000, indicated by repeated rejections, a significant red breakdown candle, or declining volume on attempts to push higher, a short-term corrective pullback is highly probable. Initial strong support would then be expected around $115,000, a key short-term pivot point, followed by an even more critical demand zone near the $110,000 level, which previously acted as strong accumulation territory for bulls. For the short term, our unbiased prediction points to a continued intense battle around the $120,000 level in the coming days, with both bullish and bearish catalysts at play. We estimate a 55% likelihood of a bullish breakout toward $125,000 in the immediate future, contingent on sustained buying pressure. A clear positive market catalyst like favorable regulatory news on crypto ETFs or a significant institutional adoption announcement within the next week. There is a 45% likelihood of a retracement towards the $115,000 to $110,000 range if the $120,000 resistance holds firm, leading to significant profit-taking from current highs or increased selling pressure from early investors. Long-term, the overall outlook for Bitcoin remains unequivocally bullish, sustained and increasing institutional adoption, favorable global regulatory environments, And Bitcoin's growing role as a hedge against inflation and a digital store of value could propel it significantly higher, potentially reaching $140,000 by the end of 2025 or early 2026. Key indicators for traders to continuously monitor include daily closing prices relative to the $120,000 resistance and $110,000 support, observing any significant shifts in trading volume, especially on breakthroughs or breakdowns, and staying actively informed on upcoming global regulatory decisions. Remember, successful trading in a volatile asset like Bitcoin demands rigorous risk management, careful consideration of position sizing relative to your capital, and diligently setting clear stop-loss and take-profit levels to protect your investment and maximize potential gains. Stay vigilant, stay informed through reliable news sources and continuous chart analysis, and always trade responsibly based on your well-researched strategy.